Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 3rd, 2025, and we're diving into Ferguson's latest earnings report for the third quarter of fiscal year 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ferguson has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Ferguson reported net sales of $7.6 billion for the third quarter, which is a 4.3% increase despite some headwinds. John, can you elaborate on this performance?
Absolutely. Ferguson's revenue growth was driven by a combination of organic growth and strategic acquisitions. They managed to increase their gross margin to 31.0%, up by 50 basis points from last year, thanks to effective pricing strategies and market share gains. The adjusted operating margin also improved to 9.4%, reflecting their operational efficiencies.
And what about their earnings per share?
Ferguson reported an adjusted EPS of $2.50, which is a 7.8% increase from the previous year. This was bolstered by higher adjusted operating profits and share repurchases, which reduced the number of shares outstanding.
Strategic initiatives and market performance. And Ferguson has been active on the strategic front as well. Can you tell us more about their recent initiatives?
Ferguson completed 3 acquisitions this quarter, which contributed to their growth. They also repurchased $251 million worth of shares, which is part of their ongoing strategy to return value to shareholders. Additionally, they declared a quarterly dividend of $0.83, marking a 5% increase over the prior year.
How did their different market segments perform?
In the U.S., which is their largest market, revenue grew by 4.5%. The non-residential segment outperformed the residential market, with significant growth in commercial and industrial projects. This diversification is helping Ferguson maintain robust growth despite challenges in the residential sector.
Operational efficiencies and future outlook. Ferguson has also taken steps to streamline operations. What can you tell us about these efforts?
They incurred $68 million in restructuring charges this quarter as part of their efforts to streamline operations. These actions are expected to generate annualized savings of approximately $100 million, which should enhance their profitability in the long run.
And looking ahead, how has Ferguson updated its guidance?
Given their strong performance, Ferguson has updated their full-year guidance to reflect low to mid-single-digit revenue growth, with an adjusted operating margin expected to be between 8.5% and 9.0%. This reflects their confidence in the market and their strategic initiatives.
Key takeaways. In summary, Ferguson has delivered a strong quarter with impressive revenue growth and profitability improvements. Their strategic acquisitions and operational efficiencies are paying off, and their updated guidance reflects a positive outlook. John, any final thoughts?
Ferguson's ability to navigate market challenges and capitalize on growth opportunities is commendable. Their focus on strategic investments and operational efficiency positions them well for future success.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ferguson's performance in the comments below. Until next time.